So, guys, I've got 140K that's sitting idly in escrow collecting less than 4% yield because I'm waiting for a decent pullback to get below a cost basis I have on many funds I currently own. And I started studying some of the funds I currently own and what would happen if I took that 140K and equally divided amongst all them funds, those six ETFs I'm currently holding at about $23,333 each allocated to each fund. And what it would do to my portfolio just on that 140K rotation from S Government to those six ETS. It would basically pay me an income of $26,250 estimated per year. My average monthly income from that would be $2,187, and my average portfolio yield would be 18.7%. Now, which six ETFs am I talking about? Let's take a look. TDAC, T-SPY, QQQI, SPY-I, BTCI, blocks. So equal distributions of or equal cash investment of $23,333 in each fund at the current analyzed yield rate of each of these funds would give me an average yield rate of 18.75% and an average monthly income of $2,187. I think I might do this because I already have a big allocation in QQQI and SPY-I and to a fairly significant degree to BDCI and blocks, and I have some shares at TDAC and T-SPY. I'm just waiting for a correction at this point to allocate even more money into these funds anyway. So I'm like, why not chase the higher yielding ones that perform pretty well? Of course, you're looking at what's happening with Bitcoin lately. I'm kind of hesitant to put too much money, much more money into BTCI and blocks, but I think I'm going to. But I'm going to reach a certain limit, and when I reach that limit, I'm just going to, if they're underneath my cost basis, I'm just going to reinvest the dividend amount because I got to afford to do that because I've got a separate portfolio from these funds as a backup anyway. So I figure, well, this ain't just my only income either. So that's what I'm looking forward to doing actually. I like all these funds. I know crypto is chaotic and volatile, but that's part of why you get such high yield too. And I'm ready to average down on it if we should go lower. And I'm waiting for my opportunity to get in at a cheaper cost base than where I'm sitting at now for QQQI, T-SPY, TDAC, and SPY-I. And those four funds are just buy and hold forever, in my opinion. The reason why you see such a higher yield for T-SPY and TDAC is in the way they do options. They're doing daily expirations on their contracts, which exacts a little bit more premium over the course of that month time period than what a monthly option would do for a QQQI and SPY-I. Now, price action on those is a little bit different, but they are still positive since inception, and over the course of 1 year, they're still positive. So I'm going to do a breakdown of these at some point where I'm going to show you what they've done for the year. I could just put them all up, I suppose. I use stock analysis for that. And basically, you can just go on the search button, put in whatever fund you want on that. Scroll down to where it says compare. Then add in what you want to do as a comparison, like T-SPY, for example. Add that in the chart. What I say, SPY-I, add that in. QQQQI. And we add blocks. And these aren't, two of them are obviously Bitcoin related, Ethereum related with blocks, Ethereum and Bitcoin and crypto miners. So those are the six funds we get over. Some of them are fairly new funds, so you're not going to get a whole year out of them. This is total return basis, what these funds have done. And kind of all over the board, really, to be honest. But you could also check this price action on these too, price percentage change. And you can see we're native currently on blocks because we had this significant pullback in cryptocurrency, and we're deeply negative on BTCI currently since inception just based on the Bitcoin pullback. But at some point, that's a buying opportunity at some point. So that's why I'm looking to get in them gradually with BTCI and blocks, and actually hold them because I got in TDAC, T-SPY during the last pullback, and SPY-I, QQQI about during the recovery from the April low. So I got really good cost basis on both of those two, including TDAC and T-SPY. So the market has to go down significantly lower. So I kind of got a strategy where it has to go down to certain points on the chart before I decide to go aggressive, especially for anything that's a cryptocurrency related type of fund like BTCI and blocks. I have to see the levels that I'm watching for Bitcoin before I start getting more aggressive in averaging down on those, because I already have 100 shares of BTCI and over 100 shares of blocks. So I'm going to do it real gradual. I'm going to average down, and then if I'm still underwater on those two funds, I'll just do dividend reinvestment on the two funds, or any fund that's underwater. So that's my strategy going forward. That's kind of where I'm going to be, I think. I'd planned that anyway during a correction to load up on the top four funds of TDAC, T-SPY, QQQI, and SPY-I. So now that I'm already allocated for BDCI and blocks, I'm going to just keep on going on with this fund, I think, because I've got money outside of this. So I've got investments outside of this already that give me a mix of different funds, closed-end funds, and ETFs, and et cetera, in different sectors like healthcare and utilities. So I think this is where I'm going to allocate money in the future if we have a significant pullback. And it's got to go beyond 10% or greater before I even start getting in on the top four, to be honest, because I'm significantly underneath the current market price for these funds as far as my cost average. Anyway, that's how much money I would make projected. Of course, that could change if these funds have a severe NAV erosion. But personally, I think, at least with the NEOS funds, you got really good NAV stability. TDAC and T-SPY are pretty new so far. So I'm still on the fence a little bit, and who knows what they're going to do long term. And BDCI blocks relative to what's going to happen with Bitcoin and Ethereum and crypto holdings. All right, guys, take care. Bye. I wanted to point something out. Back in April 2024, right, QQQI had gone down significantly in share price. But if you look out at the dividend payment, the distribution for April 24, it's at 58 cents. So it only fell by less than 2 cents for the dividend, despite the share price falling significantly during that time period. So if we're going to look at around April lows, let's look at the chart real quick, about a year. And you can see where the share price is now and where the share price was at $54, basically, a little bit higher than where it's at now, right before that sell-off back in April. You track it around the April low, which is about $42. So you see it drop from 54 down to about 40, what did I say, $42, I think? Yeah, 42 and a half, basically, 42.51. That's a significant drop in share price, but the income remained nearly the same. And that's because volatility spikes during sell-off. So implied volatility options goes up. So they're actually collecting superior premium on their options during that time period, because obviously at a $42 share price, they had to be collecting more premium on their options or returning more capital potentially. They might have been doing that too. You never know. But if you look at the recovery, the recovery was full from the April low. And that's why I like QQQI, and SPY-I's similar in that respect too. So your income is not really going to change by much because of that spike in volatility that spikes up the option premiums. That's why covered call funds are kind of good to have during pullbacks. In reality, you lose your principal, you have a paper loss on your principal, but your dividend income can remain the same, especially in heightened volatility cycles. That's kind of why I like these funds. And Neos has a great recovery anyway. So if you get a V-shaped, even a V-shaped recovery, it recovered fully. I know a lot of people say it was outpaced by the index, but all I care is about NAV stability, some kind of NAV stability. And that's what funds like the NEOS funds especially have shown. And they have preferential tax treatment too on the return to capital side of things. All right, guys. Anyway, I want to add that into the previous video. I'm going to combine it together in one video to see why I chose two of the NEOS funds as my top two picks. And I imagine that their other fund, BTCI, is probably similar in the return on capital portion of things. All right, guys. Take care. Bye.